The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey, what's up everyone? Welcome to another installment of the Chat with Traders podcast. You're listening to episode 46. Now, it's really great to have you listening, so thanks a lot for taking the time to tune in today. This week I interviewed Hans Dederle, who is the founder and president of Honza Financial, which is an options trading asset management firm located in Florida. Hans originally started out as an accountant before becoming a stockbroker. Following that, he began to trade independently and now trades other people's money as well. He's been doing this for just over 8 years now, and one of the things I really liked that came about during our discussion was how Hans has a laser focus on quality over quantity. As a day trader, he averages between 1 to 3 trades per day, which he's usually in and out of within the first couple hours of each session. This then led into the topic of making money as a secondary objective and having a primary objective to consistently make good trades in line with your strategy. A bunch of great takeaways over the next 45 minutes, so let's jump right to it. My name's Aaron Fifield, I'm your host of the Chat with Traders podcast, and here's my interview with Hans Dederle. Hans, what's up, man? How you doing?
Good. How are you?
I am doing very well. Tell us, what's been happening? What have you been up to this week? I mean, how's trading going for you?
Oh man, trading has been wonderful this week. Solid volatility in the markets, as usual. Creates for the perfect trading environment. So can't complain on that end.
Good to hear. So firstly, big thanks for coming on and doing an interview. It's really cool to be speaking with you. Now, let's see. So some of the topics I'm keen to speak with you about will be how you got into managing money, what can we learn from your approach to trading, and really just some of the foundations developing traders can build from. So how does this sound to you?
Perfect. Let's dive right in.
Cool. Okay. Well, let's do this. So Hans, I understand you've been actively trading for about 8 years now, but take us back before this time though. What were you doing? What's your background? And what was your intro to trading?
Well, it all started back in my freshman year of college. I started working as a junior accountant, and my boss at that time was a former broker on Wall Street and introduced me to the markets, introduced me to the world of investing, and, I instantly fell in love with it. I mean, it was just, something that just pulls you in. And so the following year after that, I decided to join a brokerage firm, got my Series 7, got licensed, and just jumped into the world of investments. And through that experience, being a broker, I always took the time in the evenings and nighttime to really just jump into trading and just, try and learn as much as I could to see what exactly I was selling to clients and how those stocks moved. And that's where I really got intrigued by trading and decided to really pursue that full time.
Okay, so let's just take it back right to the very beginning there. What do you think it was that initially appealed to you about the markets or more specifically about trading?
What really intrigued me about the markets is just the uncertainty of it, the mystery of it, because, you really don't know whether a stock's going to go up, down, or sideways, and so it's really interesting how many different aspects of the market there is from, a fundamental side, technical side, and what really captured the interest for me in actual trading is once I started, listening to earnings calls and watching how volatile the stocks can be, right after an earnings call and even a few days after. That's when I really jumped in and found an interest for trading and decided that, that was the path I wanted to take.
Now, you mentioned at the beginning there that your boss at the time kind of introduced you to trading. How much did he teach you? Was it enough for you to get started, or was it just enough to expose you to something new?
It was really just enough to expose me to something new, and especially coming from an accounting background, which is pretty dry. I mean, investments were just something that, is just like, it's like a diamond. It just like shines and just brings you in. So, from a trading standpoint, that was, more into about the second year of being a broker, but he really just gave me the foundation into the stock market, and that's when I just, jumped into everything from the basics all the way to, money managers and how they managed accounts.
Okay. So at what point did you actually decide to become a broker? Because I take it you obviously left your job at the accounting firm and then switched to becoming a broker. So how did you go about this?
Well, the nice thing was that, it kind of just fell into place, so to speak. When I worked for the accounting firm, we did mostly, tax preparation, which I was involved with. So once that ended in April, you know, I just started looking into, where can I apply to become a broker, and there were a few openings, and so I jumped in right into that. So, it kind of went right from leaving the accounting position to working for a brokerage firm.
Sure. Okay. And what was your experience like as a broker? And maybe if you could share with us, what were some of the greatest takeaways from being a broker leading into the '08 crash?
Well, I'll tell you what, the best insight is that when you work at a brokerage firm, you know, um, you pretty much are just another piece to the puzzle, and it's just selling, selling, selling. So from a trading standpoint, unless you're really in a division that's managing money and trading, you're not going to learn as much as you need to. That's more of on your own time. But as a broker, it was very interesting seeing the information, everything, how it flowed, how to deal with clients. Really just dealing with the analysts and seeing what their recommendations were, and just the whole gist of it. I mean, it's a very energetic environment, and so when you get into it, it's very exciting.
Okay, so presumably you probably knew quite a bit about markets while working as a broker, like you kind of mentioned there, but not necessarily about trading itself. So how did you tackle the learning process of becoming a trader once you left the brokerage?
Well, I actually started to really jump into learning about trading while I worked there. A lot of times we would work evenings, and I would spend my evenings and nights just, doing as much research as I could into actual trading. And it wasn't with a specific purpose, like I trade now with technicals. It was just, everything, so to speak. So once we started really getting into stock trading in terms of earnings reports, that's what really lured me in because, every time a stock got halted, it kind of made me think, why does that happen? How does it happen? Where do the orders come in? Um, how do they get filled once it reopens? And that's when I really said, what, this might be something really interesting to get into because I would look into other blogs on trading and see how people would trade these companies off earnings, and they were making a killing, and it was just something very lucrative and very exciting at the same time.
And so what were some of the things that you were researching during that phase, like you mentioned there? Were they things that you like? Did you have access to more information and more content than your typical trader on the retail side may have?
At that time, we just had mostly just reports from our analysts, so it wasn't anything that a retail trader couldn't get. I mean, at that time, we were really making headway into electronic trading. Still baby steps compared to where we are now, but on the same token, uh, you know, where I was and retail traders were on the same page. Um, but for me, it was more so just skipping the reports and just getting right into the trading side because that's where, a lot of people were placing bets, and it wasn't necessarily based off, you know, an earnings report because all the trades were placed before then. And that's when, you know, I really divulged into learning about trading and then the options part as well, because that's where a lot of trades and a lot of hedges were made as well.
Yeah, okay. I'm keen to ask you more about options a little bit later, actually. So, just so we're clear, how did you transition from being a broker to then trading full time?
It was pretty much, it was an easy transition only because, I was already studying it. I was already, pretty much absorbed into learning as much as I could about trading. So once that time came that trading was a full-time thing, uh, you know, I was already in it all the way. So um, for me, it was a little bit different because now I was managing my own money, my own capital, and not for other clients. So it was a little more emotionally involved, so to speak, right when I started off.
Okay, so when you did make that jump with your own trading, you were already fairly consistent with your profits and your returns and that type of thing.
Well, the unfortunate part and the fortunate part about when I started trading was it was at the peak of '08 when the market collapsed. But when I first started, it was maybe 2 or 3 months prior. And I remember distinctly my first 7 trades were all profitable, all phenomenal profits. And right when I made my first mistake and had my first loss is when the market started collapsing. And then that's when the real learning curve, set in for me as a trader.
Okay, so I mean, you had actually mentioned this to me before we started recording this conversation, but you mentioned that you had blown up one or two accounts. So speak to us about like how did this happen? Like what led up to that? What was the cause of why those two accounts got run into the ground?
Well, the biggest thing is emotion. The second biggest thing is stupidity because at that time I knew that the trades I was making weren't the right ones, but when you're a brand new trader and you have the type of market volatility that happened at that point in time, everything just hits you like a ton of bricks, and you don't really stick to your strategy, and you take one loss, you want to make it back, so you jump into another trade, make another loss, and then you start, you know, averaging down, making more mistakes, and one thing leads to another, and you just blow everything up. I mean, it's really just an emotional roller coaster, just because it's your money, and you make one mistake and you want to make it back as quickly as possible, and that's just the biggest hurdle that I had to deal with is really just sticking to my strategy and not becoming way too emotionally involved.
Okay, and besides becoming too emotionally involved and that type of thing, were there any other challenges or other significant failures that you had to overcome, which were also frustrating at the time?
Well, in terms of day trading, it's a very tight type of trading. And what I mean by that is, it's not like you're buying and holding. It's not like swing trading. You're getting in, so you basically have to fight volume, you have to fight volatility, you have to fight spreads, um, and you also have to fight the market makers and the specialists who are always against you. So, I mean, there were many hurdles, and all those hurdles uh, can really take a toll on you if you're not careful. And the way to be careful is to really devise a strategy that makes sense and that, works with your particular trading style. And a lot of times when I first started out, that was the mistake I was making, is not rationalizing a trade and just jumping in just to actually make a trade.
Okay, cool. Yeah, thanks for sharing that with us. Now, moving forward just a few more years, you began to actually manage money for other people. So, how did this opportunity come about? And had it always been your intentions from the get-go to take on other people's money?
For me, it was never an end goal to manage other people's money. For me, trading was more of a lifestyle, was more of, um, the excitement of the job. To me, it was a dream job to be a trader. And once I started really being profitable and I had 11 months of consistent profitability, that's when, family members and friends started taking notice and wanted to be involved. And, once I started managing money for them and, being successful in doing so, that's when I decided, maybe this is the path I could take because, uh, right now, hedge funds are emerging. It's the new hot career. And so, if I'm good at what I do, why not jump into it? Why not try it out? So that's when I really decided after managing money for friends and family is, maybe I can make this, a long-term thing.
Okay, and when this began to happen, you were of course handling larger amounts of capital. How did this affect your decision making, your psychology, and just your overall trading? Did it have any effect in any way?
Um, it actually had a more positive effect only because, when you're trading your own capital, you have more of a safety concern and you put that mental block in your mind, and sometimes you miss the right opportunities to make an entry and to make an exit. When I'm managing other people's money, it kind of takes that personal emotion out of it, and I can focus more on the actual trade and not the monetary value and not how much I'm looking to make out of a trade. So I'm looking more at the entry and the exit, and so it's more of a professional standpoint and not an emotional standpoint. So once I was able to take the emotion completely out of it, is when it really just started clicking for me. And that was especially when I started managing money for other people. Um, it's just a different caliber of trading. My trading style never changed, but it had to become more adaptive to, higher capital allocation, and also, um, with that said, the emotions taken out, so it's easier for me to be able to handle multiple accounts at once and not be, you know, uh, strapped down, wondering where everything is going, what's happening, and all that.
All right, good one. So, Hans, I'd like to now focus more on your style of trading. So, if you could, just take a few minutes to describe your actual method of trading and the types of trades that you like to be involved in.
As for me, I like to trade in mostly tech and biotech companies. I think that for my style of trading, high volatility stocks are the only way to go. Um, I did when I did start trading first in my first few years. I did trade stocks primarily. Once I learned about options and the leverage they provided and the minimal capital you can put up, based on how much you're actually controlling in stock, that's when I decided to trade options full time. And for me, what I look for in my trading strategy is mostly reversals, and these happen usually in the first 30 minutes of the trading day. Um, and this was one article that I read that talked about specialists and market makers and how the correlation between them and retail traders is the same as Vegas and gamblers. I mean, the house will always win. So, especially in this day and age where everything is electronic, you're not going to beat them, so you might as well join them. So, I kind of started to develop that into my strategy, and a lot of times, there'll be gaps in the morning, either up or down, and I'll basically watch the volume. I'll see where the resistance and support is based on the candlestick patterns um, on my 5-minute charts, and that's the way I place my trades is to find the extreme on either side. So, for example, if Netflix drops on the open and we're down 5%, and I'm looking at the volume, the typical reaction from any beginning retail trader is going to say, let me sell out of this position because it's dropping. For me, it's let me find that support level at the bottom because this is where the big boys are buying in, and that's where I'll place my position on a call and ride that up. And it's the same pattern, if it's, reaching a high point, reaching resistance um, on a gap up, then I'll be looking to place a put option. So for me, my style of trading is mostly reversals, and that is also why I only place about, one or two or three trades a day, because I try to focus on the quality of the trade and not necessarily the quantity and just scalping.
Right. Okay. So I've of course got a bunch of questions around your comments there. So first of all, trading the open. I mean, that's generally the most volatile part of any given day, and there's a lot of noise, lots of short, sharp moves. What helps you to get a clear read on what's going on here, or to even anticipate the direction?
For me, it's just I usually take a look at I take a look at the stocks that I have on my platform, and I take a look at the charts, and I try to see where they are relative to the prior day's close. So if they're already gapped up, then I'm going to be looking to have a put position ready to trade. Same thing if they're gapped down, and be looking to have a call position. So for me, it's mostly looking for the extremes in the volume, because you're going to have your high and low set within the first 30 minutes of the trading day. So, you know, the broad markets don't really, matter to me. The futures don't matter. It's really just looking at that individual stock. And for me, it's the price action, the volume, because, you know, there could be a huge gap up, it'll start to push up even higher, but the volume will be extremely low. So that'll be, an indicator for me to get into a position. So for me, it's really the extremes, and they usually happen every day, unless there's some kind of catastrophic event in the market.
Okay, so just on the topic of volume there, I mean, some traders really do factor this into their trading decisions, and it sounds like, you're one of those traders. And then on the other hand, some have very little regard for volume. But I mean, could you just share a little more on what you like to see happen with the volume to give you conviction on a trade?
For me, I'm looking at not only volume but also level two, because I'm trying to see where the order flow is going. So, for example, if we're, let's say we're at neutral on the day, so it's not, so the stock hasn't moved pre-market, and the first candle it gaps up, and let's say it's up, stock's at 100 and it's up at 105. So what I'm looking at on the volume is I'm looking to see what the order flow is. Are there more sellers coming in at this peak? Are there more buyers? And that's really where my conviction is. I don't like to add too many indicators. I use RSI strictly as a lagging indicator, and that's on more of an extreme level. For me, it's just using the candlesticks, and I mean every day it's the same setup. So it's really also a psychological standpoint, because as much as everything is electronic, everything's controlled by specialists and market makers, and everybody placing a trade. Besides your big funds and algorithms. I mean, there a lot of them are retail traders, so there's a lot of human emotion involved. And so what I look for is the greed in the market, and the greed in the market is what really develops a solid trade, because um, the volume will tell me whether people are starting to pull back, whether they're still buying. Once I see weakness, and that's where my price action is my primary indicator, that's when I'll start to have a trade ready and place it when I'm starting to see resistance or support.
Okay, cool. So typically speaking, 1 to 4 trades per session, like you mentioned a little bit earlier. I mean, that's a fairly low number for a day trader. This is obviously intentional. So share with us why you choose not to take more trades.
Well, I mean, the first part, I mean, commissions will eat up your profits if you're taking way too many trades in a given session. But that point aside, for me, it's always been quality over quantity, and I look for I look for moves that I can get into and ride the wave, instead of just getting, I don't know, 10 cents on a contract and then pulling out. So what I like to do, let's say for example, I'll buy a call option, I'll put a trailing stop in, and so it'll be at a 10 cent interval. So every 10 cents it goes up, my stop gets moved up. So even if it drops again, I'll be, stopped out at a profit. So for me, I like to get into a solid trade where all my instincts and all my indicators are giving me a solid conviction and be able to ride that move up a few minutes, and then exit the position instead of just trying to scalp, a few cents per move. Um, and that's worked for me for many years. I tried the scalping, but it's really, it gets too complicated, and it just gets messy.
Okay, so with that being said, how long would you say on average you hold a position for?
Um, that actually it varies. I'd say on average between, let's say, uh, 1 to 5 minutes. There's positions. I placed a position last week where I was in and out in about 30 seconds. Um, it really just depends on how extreme the move is in the individual candle. Um, if the stock's at 100 and I'm in a call trade, and it goes to 104, then I'm gonna exit my position. So um, it really all just depends. I usually try to set an entry and exit on each trade, um, and if it jumps into a next candle and just keeps going higher and higher, then I'll wait a little bit. Um, if not, then I'll just exit my position. So I try not to get too greedy with each trade, but I do like to have a set target, with each position I enter.
Okay, so you just said there that some of your trades might range from 30 seconds up to like 5 minutes. I mean, that kind of sounds like it's borderline on scalping. How does it differentiate from scalping?
Well, how it differentiates is the fact that, because of the volatility in the first 30 minutes, there are going to be, very wild swings in either direction. So um, there can be a pop, a drop, and another pop, and then it's just going to ride up and away for the rest of the day. But for me, a lot of times I've seen friends that scalp, and I've even tried it my first 2 years of trading, is just looking for a few cents per move, and get out and get in and get out. But for me, it's just, especially in these stocks that, are so volatile, the moves will be quick. And if you're in the right position at the right time and that profit's there, then I'm going to take it. Um, Otherwise, if I held it longer, then it would turn more into like a swing trading scenario, and that would be for more, more into the session. So I try to end my trades around 10:15, 10:30 is when I'm done, and that's where the most volatility is. So I try to make sure I capture my profit instead of, being greedy and then taking a loss.
Ever watch a stock rip and think, I could have nailed that if I had real capital? The truth is, many capable traders never reach their potential, not due to lack of skill, but lack of scale. Trade the Pool was built to solve exactly that. A firm designed for serious individuals who want access to the U.S. equity markets with meaningful buying power, up to $200,000 without committing their own capital. Get access to virtually every stock and ETF. Go long or short freely with the flexibility professional traders expect. You're evaluated on one thing: your ability to manage risk and execute with consistency. Meet the standard, and you trade at scale. No subscriptions, no ongoing commitments. Whether you're still refining your strategy, a trader with experience who hasn't yet broken through, or a seasoned professional simply looking for more capital, Trade the Pool is built to meet you where you are and take you that next step further. The markets have evolved, access has evolved, now so has the way traders operate within them. Trade the Pool.
I mean, you spend very little time actually, I don't know if it's the right word, but invested, actually active in the market. So how do you actually find those, 1 to 2, 3, 4 trades that you might take in a session? Like, how do you have an idea before the bell rings what trades you might be taking that day?
I mean, definitely, definitely. I usually trade, I pick two stocks. I kind of done, a lot of back testing, a lot of research, a lot of, studying charts on individual stocks, and I try to figure out which companies work with my strategy the best. And so I'll have them set up, and I mean, for example, I'll trade Netflix and Amazon day in, day out, and I've traded them for the last 4 or 5 years, and it's the same moves all the time, with exception, obviously. So for me is I'll set up you know, uh, my options, set up my trades, and I'm ready to go. So if I see, a gap up, a gap down, or a neutral, then I already know, you know, where my gut's telling me where it's going to go, where the highest probability that it's going to go, and that's where I'm, ready to pull the trigger. Um, Obviously, it's a little more involved than that, but I always have a game plan going in, um, and I like to be, prepared for each trade.
Okay, so essentially, there's two stocks that you really like to focus in on, and that's essentially where most of your trades are taken within those two stocks. Is that right?
Yes, yes.
Okay, cool. So I'd like to pick up on something you touched on a little bit earlier, and that was kind of trading on the actions of market makers. And I'd like it if you could perhaps go into this a little bit more. So just help us understand the concept of this a little bit more, of trading the actions of market makers.
Well, definitely. Market makers are in it for, to make a profit, and they're not going to lose. They're the ones from the big firms, J.P. Morgan, Goldman Sachs, list goes on, and so they're basically the ones that, are on the other side of our trades. They're the ones managing the order flow. They're the ones that have their own capital and, in the millions. To really, keep the individual stock, liquid, and each stock can have, depending on their volume, up to, from 4 to 40 market makers. And so you have to know that these guys, are all going to make money, and so you have to be on their side. And it's like I talked about before, when the market's dropping, then they're slowly buying up, and when the market's just ripping higher, I mean, they're starting to accumulate short. So you'll never know, because now, you have dark pools, and you have, smaller block trades. So they have a way of manipulating and really hiding their individual trades. So you'll never know. But I mean, it's just a pattern that I've noticed when I started, and it still holds true to this day, that, these guys are in there and they're making their trades, and if you're on the same side as them, then you're making money, and if you're not, then you're losing. I know a lot of times when I would place a trade and I would say, what, this is the perfect position to buy, and I would buy, and all of a sudden the market, would just, the individual stock would just crash, and I would either get stopped out or at the sellout. So then as soon as I did so, then it would pop up again. So it's really about timing, and it's really about understanding, what their mindset is. And once you click into that and you really start making trades on, on their fundamentals mentally, then you'll be successful.
Okay, so is there anything that confirms or makes it very obvious to you that you're on the same side as the market makers?
For me, it's more so looking at the extremes. Once I start to see the support and the resistance, you'll start seeing that, you'll start to see the switch in the number of trades and the actual volume in the level two. And in those extremes, they'll have, in the individual candle, you'll see that they'll, for example, if it's down big, and they'll pop it up a little bit, bring it back down, pop it up, bring it back down. And once you start to see that, you'll start to see the consolidation happen in the individual candle itself. And I use 5-minute candles, and so that's when I start to see that the momentum is there to go back up, the accumulation's happening on the buy side, and that's when I'll place the position. A lot of times, I'll want to. The next candle drops even more, but I have to see that support. And if I don't see it, and if I don't see them, starting to accumulate slowly, then it's not something I want to get into.
Okay, sure thing. So, yeah, that's good to get a little more insight on that. Now, this is something we were speaking about a little bit off air, and that was simplicity. And I mean, this seems to be a topic that's come up quite a lot lately. But how have you made a conscious attempt to keep your trading style simple? And also, is it occasionally difficult to maintain simplicity because naturally we have the urge to often overcomplicate things?
It's always interesting, whenever I see other traders online, or I see seminars, and they'll have a chart and it'll be just jam packed of indicators. And what happens is a lot of times you confuse yourself when you have too many indicators, and you know they're not always going to be in correlation with each other, and so you're going to make mistakes. For me, um, RSI is the only thing I have on my chart, and that's more of a lagging indicator. That's more of a final conviction for me. If the stock's trading at its extremes, be it, whether it be on the low side or the high side. Um, but when you keep it simple, you stop overanalyzing, because especially in day trading, there's no time to really overanalyze. It's either you're getting into a position, or it's gonna jump away, and you miss your opportunity. So um, for me, it's find the conviction and the simplicity of the actual stock, because it's there. Price action will always tell you where a stock's going to go. Everything else is just more of probability, in essence. So um, price action and volume has always really been the most important thing I rely on. Um, Plus, I mean, stocks don't really move necessarily on fundamentals or technicals. They move more so on supply and demand imbalances. So, y- it's who's buying and who's selling, and that's going to drive the extreme of any stock. That's what's going to drive your price action. That's what's going to move the price. That's what's going to drive the chart patterns, and that's the easiest way to make a trade, because once you start overcomplicating and putting way too many indicators on your chart, I mean, you're just looking at a maze and you just confuse yourself.
Yeah, that's a really great point you bring up. And something else that came up when we were initially exchanging emails back and forth, you hit on the importance of creating a system and sticking to it. So what I'd like to ask you, as a discretionary trader, what does having a system mean to you?
A system to me is most importantly being disciplined. And um, a lot of times, especially as a new trader, I would do it, and many other people have done it. You make one bad trade, and then you try to make that money back as quickly as possible, and then you completely throw your system out the window because you're focused on one thing, and that's making back a loss, and not actually focusing on trading. I mean, you're always gonna fail your way to success. I mean, that's just hands down. So for me, the most important thing is discipline and having a strategy and sticking to it. Um, Obviously, emotion is the hardest thing to take out, and that takes years, because we are human, so emotion's always going to be there. But you want to limit it to a point where it doesn't affect your trading style per se. So for me, it's I don't look at it as how much money can I make. I look at it as, okay, here's the chart, here's what's happening, this is where I want to enter, this is where I want to exit, and that's it. So, everything else is secondary to that.
Okay, now you hit on emotion there, and I'd just like to not skip over that because it is such an important thing to traders, and it affects pretty much everyone who's involved in this game. So over the years, how has your attachment to money kind of shifted? Like you said, it took a matter of years before you begin to kind of not ignore but reduce the impact that emotions had on your trading. So what type of things have changed over time?
As with anything, I mean, it's really experience, and you know, if you have discipline with experience, then you're going to move in the right direction. If anybody can be doing something 20 years and be doing the wrong thing for 20 years. So you really just need to focus on, the strategy, the discipline, and look at money as a secondary objective. The primary objective is to make profitable trades each and every time. And even if you make one bad trade, two or three in a row, you just need to still focus with your strategy and, stay disciplined to it and never quit. Because I used to look at money as the end game, how much can I make on this trade, how much on that trade. Um, but capital really is just a tool. And so when you take that out of the equation and just focus on the trading at hand, then that's when you'll start really focusing on what needs to be done, and the profits they'll be there at the end of the day. But if that's the only thing you're focusing on, then you're not going to be successful as a trader.
Yeah, so speaking of kind of sticking to a strategy, even after, several losing trades, how did you gain the confidence to stick to a strategy? Because I mean, as a trader who's still kind of on the come up, many struggle to have confidence in what they're trading. So how did you get the confidence to stick with a strategy in the early years, even though it hadn't really proved to you yet that it was a good strategy to be trading in the first place?
I mean, to really be confident in a strategy just takes perseverance. You know, Especially with trading, it's an ever-changing landscape, and you're always going to have to adapt to different conditions. With my strategy, it's pretty much been the same for, I'd say, 5 or 6 years, but it has always been tweaked, a tiny bit here, tiny bit there, to really adapt to the market. And that's the important thing, is to know that you don't have to reinvent the wheel, but sometimes you're going to have to make improvements. And that's what I've done, and I'm sure there will come times where the market's going to change up a little bit, and I'm going to have to adapt to that and kind of make improvements to my strategy as well. So it just takes perseverance and really just like practice at it. I know I spent about, I'd say, 4 to 6 months paper trading my strategy, just to fine tune things and really just focus on the actual trading instead of the money, because like I said, like we went on before, when you take the emotion out, everything just rides much smoother. So if you have a strategy, practice with it first, really fine tune it, and then implement it into the actual market.
Okay, well said, well said. So, just while we're kind of on the subject of it, the fear of missing out is a real thing for many traders, and I'm sure this is something that you've been affected by in the past, even if you're not affected by it too much in current times. How did you deal with this? And speak to us about your views on chasing trades.
A lot of times you will, as a new trader, I mean, you're obviously going to want to chase trades, and the problem is you chase the wrong one. So I mean, I've done it countless times where you have a position move against you, and you just want to hold it and just hope it comes back. 90% of the time it doesn't, and you just take a bigger loss than if you would have just stuck to your stop loss and got stopped out, or actually sold out by yourself. And then again, on the flip side, you have a position, you have a small profit, and you cash out before, and then you see it just keep riding, and you missed out on hundreds or thousands of dollars in profit. So the important thing is to, if a position moves against you and it's at whatever your risk tolerance is, mine is 2%, I will exit that position, and that's done. So if no other opportunities come, then I wait till the next day. If I have a winning position, then I'll put in a trailing stop, and so I have my profits locked in. And I'll either ride it out, or I'll just take a profit and then the position and look for another one. So the important thing is not to chase the wrong side of the trade. And a lot of times for traders and for me as well, when I started, you're chasing the wrong trade and you're letting your losers lose and your winners you're cutting short, and that's a huge mistake.
Sure thing. Okay, really great answer there, Hans. Now, let me ask you one last question, and then we'll probably call this a wrap. So, are there any resources, blogs, websites, or books you'd like to recommend to traders listening that have been helpful to you?
For any traders that are actually looking to, trade intraday, I would say, um, just basically go online and just look up trading, just look up the fundamentals of it, and really, set up a paper account and just start trading. And it's more of a trial and error. I don't think there's really any book or textbook that's really going to give you a great answer or a great blueprint for day trading. I mean, value investing and long-term investing, those are great for other people, but you can read up on that all you want. But for trading, it's more of a, experience type of career. So, all it is just do your fundamental research and just build a foundation. Just read as many articles as you can, and open a paper account and just start trading and just figure out what works for you.
Totally brilliant answer. Now, Hans, where can listeners go to find out more about you and to also connect with you?
To connect with me, you can connect with me on Twitter at Dederle. That's Dederle. And my firm is www.hanzafinancial.com. It's Honza. And also, I'm also on Instagram, sorry, at Honza options, and that's with a Z. So you can all find me on there.
Awesome. Okay. And guys, I'll be sure to include links to all of those in the show notes. All right, Hans, well, thank you very much for doing this. It's been awesome speaking with you. So have a great evening, and let's speak again soon.
All right, perfect. Thank you for having me again.
No trouble.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.